commodity technical analyst, and it gives me great pleasure to be joined by Alan Dunne of Archive Capital here to talk about the Technical Trading Systems Conference that is being held in London, One Moorgate Place, on the 16th of April 2024. Alan, good to see you.
Good to see you, Gerry. Yeah, looking forward to the event.
Good. And just for those of you who don't know Alan, his background is he did a technical analysis as a research analyst and trader at Bank of America. And I believe you're in London, Hong Kong, Singapore. Is that right?
That's right, yeah.
I got it right, yes. And from there, you moved around a bit, but you wound up eventually in Dublin, back in Dublin, and you were working with a big allocator. And now you have your own firm where you do something similar, where basically you set people up with CTAs, manage money, and things like that. Is that correct?
Yeah, so I was an allocator at a fund of hedge funds that focuses on quant strategies, managed futures and macro and FX a bit. And since I started my own business, I'm working with investors, helping them source and evaluate and allocate to managers, definitely with a focus on technical strategies like systematic macro and trend following and volatility trading and strategies like that.
So yeah, the title of your talk is What Allocators Look For in Technical Traders. And here you are going to give tips. And it looks like a pretty long agenda here for a short talk. But basically, you're nice enough to be able to stand up and tell the interested audience, this is what allocators are looking for.
Yeah. So obviously the conference and the event is aimed at people who have a trading background, who want to move more into developing technical trading systems and possibly developing their own funds. So I guess I'm there to give the perspective of an allocator as to, how the whole industry has evolved over time in terms of the sophistication of the strategies that you now see, and, what's interesting, what's less interesting from the perspective of an allocator. And obviously, you might say, well, what's going to be interesting? Anything that makes money, but it's not often as easy as that. You got to think about, is the strategy differentiated? What's the level of volatility it runs at? What's the drawdown profile? And all of those things. So what might be interesting to one person managing their own money as a trader may or may not be an interesting investment product when you go to position that with allocators. So I guess I'll be there to give the perspective of the allocator and try and give some guidelines and tips as to what might be helpful.
I think it's going to be really useful, Alan. And I know I was speaking with you in the past. To me, it's always interesting because basically we both came from a background where you were forced to be disciplined, otherwise you looked for a new job. In terms of balancing risk and reward, it was one thing to say, yes, I'm using up my entire allocation. It's another thing to say, yes, I'm using up my allocation, and boy, did I lose a lot of money today, because
Yes.
that conversation never ends up well for the traders. So I think the idea of using quantitative techniques to not only try to make money, enhance returns and come up with some sort of, like you said, differentiated way of trend following or spotting breakouts and things like that, but also controlling risk. And I'm looking forward to the risk part of it as well, because that is the part that we so often get wrong. I mean, is it better to do 200 trades where you make 1% or 75 basis points, but you have a tight risk? Or is it better to do swing for the for the cheap seats and get it right in one big trade? And if it goes wrong, oh well, there goes the fun.
Yeah, no, you're right, and it's the classic debate around systematic versus discretionary. And obviously, one of the benefits of developing technical systems and being systematic is it gives you the ability to apply it through a broader array of markets. Obviously, if you're discretionary, what you tend to find is discretionary traders, as you say, will tend to have a smaller book of more concentrated bets. And very often that's the case that it suits some people personality-wise and it doesn't suit other people. So, that's certainly one of the things that you find dealing with lots of traders, that they ultimately they'll evolve to find a way that works for them personality-wise. And not to say one's better. Some discretionary traders are very good at managing the risk and taking their losses very quickly. But the other thing I would say is, even in the systematic world, you're always making discretionary decisions all along the way. You have to
and that's going to be a surprising thing for a lot of people.
Exactly. Which markets do you trade? Which ones, how fast is your system? And then you know, when you have strategies that start to struggle, do you take them out or do you keep them in? So having a process around that is obviously very important as well. And you know, increasingly, even the discretionary guys are, you know, trying to exploit the benefits of quant models to a greater extent. And you know, we're hearing more about quantamental approaches as well. So there's the hybrid approach. So
That's got to
nothing
be
is
the
right or
worst
wrong,
word
but
in the world.
yeah, it's finding something
Quantum.
that works and that's going to be valuable for investors, and that's really the holy grail.
Alan, I'm really looking forward to your talk. And you know, for anybody who's interested in this sort of event and wants to hear Alan speak, it's going to be a hybrid event. You can show up in person and see Alan in London, or you can go on the webinar and see him over your computer screen. Looking forward to it, Alan. And thanks again.
Thanks, Gerry.